I think that this time around, it might, the worst words on Wall Street, it's going to be different this time. But I do think it will be a bit different in that there's a lot of secular forces that are keeping inflation in tow. Yes, there's definitely labor shortages in some areas, but there's also a technological revolution going on that is going to help lower costs. And then partnered with that, what I think are continued aggressive central bank policies in Europe and Japan, which will ameliorate some of the Fed's activities here. So I think the Fed will be somewhat restrained by both of those. And I also think that our friends in Japan and Europe continue to be very aggressive.
And they will stay looser longer. But let me come back at you, Steve, with one counterpoint, and that would be that while there certainly are mitigating factors about wage inflation, there may be troubles on the trade front that could raise prices domestically as well.
Absolutely, and I think you can either win big or lose big on these trade wars. If you can come to a quick deal like you did with Mexico and improve America's position there, that's great news. If you're going to run into problems with Canada and China, and this is going to become a prolonged trade war, that's going to be bad news.
Right.
So I understand why he's doing what he's doing, but these deals need to get done quickly. If they're prolonged, it's going to have a negative impact on the economy.
Christian, we've had a little bit of, I think it's fair to say, weakness, at least in some of the broader market indices. Is this seasonality of the month of September, which we know can historically be a difficult month for the markets, is it because we're worried about trade and going to see what's going to happen after the comment period ends? I mean, what's holding us back right now, and what does it mean for the rest of the year?
Yeah, I think it's a little of both. There's uncertainty here, and that's on the Federal Reserve side. It's also on this tariff side. We've had now 53 days straight, going back to June 25th, without a 1% move in the markets. Kind of had this subdued kind of market, despite a lot of headlines. And I think what we may be in for is potentially a rally here should President Trump be able to execute on these tariffs. And I kind of think it could be an October surprise. He's very concerned about midterm elections. Getting a deal done with Canada and China would be huge. And I think we could see a rally in the S&P of maybe 5 to 10% on that news alone.
If it's a rally in the S&P, is there any one or a handful of sectors that would stick out to you? Or do you think broad-based, a rising tide could lift all boats into the end of the year?
Well, certainly companies with a lot more international exposure, but I think technology could benefit. I mean, we think that battery metal materials companies could be poised to rally. They've been a victim of a stronger U.S. dollar and this trade tariff talk, yet their underlying businesses are really strong when you look at electric vehicle demand. So there's a variety of segments that I think could outdo the S&P. But in general, I think, this 50% or more of revenue coming from outside the U.S. is going to lift the S&P and really catch it up and surpass the Russell 2000.